Howdy folks, and welcome to the Daily Coin. My name is Rory, and today is Thursday, May the 19th, 2016, and I have the great honor and distinct pleasure of welcoming back to the Daily Coin for the first time in a very long time, my co-host and very good friend from the Shadow of Truth, Mr. Dave Kranzler of InvestmentResearchDynamics.com. Dave, how you doing today?
I'm doing well, thanks, Rory. Hey, thanks for having me on. It's gonna be interesting being the interviewee as opposed to the co-host of an interview podcast.
Shaking it up a little bit. You were one of the first people. You were the first real actual interview that I ever did for the Daily Coin, and it has been far too long. We've been doing all the Shadow of Truth stuff, and so I didn't think it would be appropriate, but I was wrong, and that's going to change. We're going to have you back on as a regular guest for the Daily Coin, and I certainly appreciate your willingness, Dave.
Hey, anytime, Rory. I love working with you.
Yeah, it's great. We have a good time. But this is all about miners. We're going to talk about miners, mining stocks, and what's going on out there in the markets. And there's a lot of talk, as you well know, Dave, about miners these days. As you may or may not know, I've been interviewing a lot of mining executives over the past few weeks, and I wanted to bring you on, Dave, to discuss how you see the current situation with the miners. I know you follow them very closely and offer what you call the Mining Stock Journal, which is a subscription service. So you're well aware of what's happening with the miners and the potential these stocks offer. As most people know, we spend a lot of time, you and I in particular, discussing physical silver and physical gold. We also spend a lot of time citing the criminal activity associated with the markets that currently generate the market values. Why would anyone get involved with the equities markets known as mining stocks that make up gold and silver stocks?
That's a really good question, and it's actually asking two things. One is, the first and most important one is, why do I want to own stocks? Because it leaves me exposed to the custodial financial system. And if these custodians collapse, I'm going to lose that money. And that eventually will happen. Let's not make any mistake about that. And then the second part of the question is, why do I want to own gold and silver stocks? If I accept that I don't mind having some custodial risk. And from my perspective, and this is kind of the model that I've operated on for the last 15 years, and again, most of us who've been doing this for at least the last 15 years, we thought the system would have been completely collapsed by now. So clearly they've figured out a way to keep it going a lot longer than any of us would have thought, which speaks to the point of none of us knows when it's going to collapse. So owning, first of all, gold and silver mining stocks are by far the cheapest sector of the stock market. I think the only way you could ever find a cheaper stock is if you know of some company that has a bona fide cancer cure and is trading for 10 cents, 10 cents a share because no one knows about it. But the idea here is to invest in these stocks. The system's given us an extraordinarily historically undervalued sector. So you buy these stocks as they go up in value, you take your profits and you buy more gold and silver, physical gold and silver that you take out of the system. And let's face it, every single one of us, unless we're completely off the grid and living like cavemen and you don't even have an internet, which means all of your people listening to this are in the system by virtue of at least having an internet account. And everyone has a banking account. So you're in the system. And you have to keep a toe in the system, so you may as well keep a toe in the stock market. And the best way to do that is with the mining stocks. And like I said, as they go up in price, you take your profits and you buy more gold and silver. I mean, it's essentially the elitists are giving us, in a way, free gold and silver, and they probably don't even realize it. So why not take advantage of it?
Yeah, and who doesn't like free gold and silver? I mean, my goodness, I'm in the system, and everything that I have in the system, I don't see as being my own. Period. I don't. So if I can use the system to my advantage and take full advantage of what these people are allowing me to do without breaking any laws, I'm not doing anything wrong. I'm playing by the rules. And all of a sudden my stack doubles because the stocks are going up like crazy. I mean, why wouldn't I do that? I mean, just that's just I'm all about free, and if I can get free gold, if I can get free physical silver, I want to do that. And I see this as being having the potential to offer me that scenario.
That's right, and that's a good way that you have to look at it. And that's with anything you have in the system, whether it's a pension fund, a healthcare policy, whatever. It's not really yours.
No,
So you put a little bit more money in the system in these terms of these mining stocks. They go up in price. You take your profits. You buy more gold and silver, and that's the model. And it's going to work until the whole thing implodes, and no one knows when that's going to happen.
exactly. It's going to work until the whole thing implodes, which could be another 15 years. And if I got 15 more years of free gold and silver, hey, life is good.
That's right. And I don't want to buy Tesla. I don't want to buy Amazon. These things are insanely overvalued. So you buy some mining stocks, and you look at it as a cheap option on the idea that the system could perpetuate longer than any of us thinks that it can.
Exactly.
You may as well benefit from it.
And I want to kind of look at it at a little bit larger picture and see what your thoughts are, or get your thoughts on how this may or may not impact what's happening. And as you and I have discussed on numerous occasions, the Shanghai Gold Exchange now offering in yuan a physical gold contract. And as we all know, I think the last number that I heard on the COMEX paper gold was 542 to 1. You got 542 paper ounces to 1 physical ounce of gold on the COMEX. That is going to change. That is going to go away. It has to. Just the laws of nature says this has to end. So as the Shanghai Gold Exchange continues to unfold and come into its own and mature, won't that impact what we're talking about as far as these junior miners and miners in general? Won't that impact what they're doing and the stocks that support these companies?
Well, sure. I mean, to the extent that what China's doing with their exchanges is they're making them actual bona fide physical gold and silver exchanges, meaning that they don't have the paper fractionalized system that we have here in London and New York. And at some point, they can use that as a lever to really squeeze the price of gold a lot higher. A lot higher, and no one knows when they're going to do that. I mean, I remember thinking back in '05 that if China wanted to, they could squeeze the dickens out of the paper gold market at any time. And I don't think at this point in time it's in their interest to do so, because they still have a lot of exposure to, well, treasuries, for instance, and a lot of exposure to just fiat currencies in general. So, I mean, the Chinese think in terms of decades, not quarters. It's not, what did you do for me last quarter? What are you going to do for me next quarter? It's like, okay, how do we want to improve our position versus all these other Western countries, but do it in a way that it doesn't completely cause global disruption? And to me, I think that's kind of the game plan they're operating on at this point.
Okay. If you would, just give people a brief overview of what the HUI, the HUI, the GDX, and the GDXJ markets are, and what to look for when following these mining stocks.
Sure. Well, the HUI is an index of mining stocks. It's 15 stocks, and it'd be, you know, like the Dow Jones, only 4 mining stocks. And originally it was supposed to be, it was, as opposed to the XAU, and I forget how many stocks are in the XAU, it was supposed to be mining stocks that don't hedge their production. So the XAU would have a blend of them in there. And originally, when I first started doing this, the only stock that was in the Huey that had hedges was Barrick. So that's the Huey. It's an index of 15 mining stocks, largely gold mining stocks, but it's not pure anymore.
Okay.
The GDX is an ETF, and it's got in it, we were looking at this earlier, I think it has like 37 or 38 stocks in it, plus or minus. I counted, but not super carefully.
Yeah.
And so it's when you buy the GDX, you're buying into a portfolio of 38 mining stocks. Now, the interesting thing is, and of course this never comes up, 23% of the GDX by market cap is Barrick, Newmont, and Goldcorp. In my opinion, those three are among the worst managed large cap gold mining companies out there. Probably in that order: Barrick, Newmont, and then Goldcorp. And Goldcorp, when I first started doing this, was a great company. That was when Rob McEwen ran it. And then he transitioned out of it, and the people who took it over, I think, have really not done a great job. They've overpaid for acquisitions, for a lot of reasons. I don't need to go into it. But so you're buying, you buy GDX. Well, 23% of 23 cents of every dollar you invest in it is going into Barrick, Newmont, and Goldcorp. And those are the three that I would recommend the least of any mining stocks out there, of the large caps anyway. And the other problem with Goldcorp, or with GDX, and it's the same with GDXJ, is that it's diversified. It's 38 stocks. I have confidence in my research, and I want to make big bets on horses that I think can win the Triple Crown. And in this case, the Triple Crown is a rare event. In this case, good mining stocks being quadruples or quintuples, I think we've got a very high probability of that happening if you do your research correctly. So, I mean, GDX is great if you're a big pension manager and you just want to have, well, we need to put 2% of our fund in mining stocks. Okay, buy GDX. Have fun with it. And then GDXJ, a lot of people like to use it in lieu of buying junior mining stocks. And what's interesting about GDXJ is first of all, it's got 48 stocks in it. And I've always felt that, diversification became the buzzword in the 70s and 80s, and it was the foundation of portfolio management and finance. And it was developed at the University of Chicago, which is where I went to business school. And when I started looking at what they were doing, I was like, when you diversify any chance you have of ever really making money, getting
money
ahead. If you want to run with the pack, then go ahead, diversify. If you want to get ahead of the pack, and put some confidence in your ability to bet on the right horses, because that's where you get rich. And I think maybe Soros has had a quote. One of the famous hedge fund managers has a quote to that extent. Why would I diversify the reasons why I'm trying to make a lot of money doing this? But I digress. To get back to GDXJ, you got 48 holdings in there. And if you go through line by line on these stocks, they're not junior mining stocks. First Majestic is 6% of the GDXJ.
Wow.
Well, if I want to own First Majestic, and we had it in our fund up until a couple of weeks ago, when I sold it to downgrade into another junior idea that I found that I liked, I'll just buy First Majestic, because First Majestic's going to outperform GDXJ.
By a lot, in my opinion.
By a lot, exactly. So why would I diversify the reason of owning First Majestic by buying GDXJ? I'm going to take that money and buy First Majestic. And that's probably the best quality stock that's in the whole list of 48 in terms of their stocks. Because like I said, these are not junior mining stocks that they have in here. You go through here, well, I guess you could maybe say Seabridge is still a junior because it's not producing, but all it takes is $1 billion capital infusion, and they put in a mine and they're producing. I guess my point here is that when you go down line by line on these holdings, most of these companies are what I would consider sort of mid market cap capitalization stocks. A lot of them are either producing Coeur mining is called now, CDE. It's the largest. I think they're the largest silver producer in the world. That's not a junior mining stock. So why is it in GDXJ? Why is it in something that's marketed as a junior mining stock index? I mean, give me a break. When I think of junior mining stocks, I'm thinking of I want to look at the exploration stocks that own land and have management that had proven track records when they were working for the large cap companies. And a lot of them left these companies in the 90s when gold was still in its bear market and was headed lower. And they went out and they acquired very cheap properties and started poking holes in the ground. And those are the companies that are going to find the next big deposit. I mean,
Exactly.
I can think of a handful of junior mining stocks off the top of my head that have. In fact, one that I featured in my mining stock journal a couple issues ago. I mean, they've got 5 million ounces of gold and silver proved in the ground, and they're working towards getting permitting in place on one of their deposits, and they're going to start producing gold from a 2 million ounce deposit probably in early 2018, and they're going to be producing it cheaply because it's going to be open pit and it's going to be low cap startup. And those are it's the companies that you can identify that they're poking holes in the ground in the right place. Somewhat low risk political jurisdiction in proven mining districts or in potential new mining districts that are near proven mining districts. Areas, they have land that's adjacent to properties where large cap mining stocks are producing hundreds of thousands of ounces a year, and there's plenty of those juniors out there. You just got to look for them, and I want to own those stocks. I want to own the ones that have a $30 million market cap with the potential to go to 300 million. So a 10 bagger. There's not any stock in the GDXJ that has that potential unless the price of gold goes from 1,300 to 3,600, and then some of these stocks might be 10 baggers. At $1,300 an ounce of gold, there's a lot of juniors out there that have the potential to be 10 baggers without the price of gold moving from where it is.
And that's what you want.
And that's what you want.
Because as gold has to go up. It's law of nature. I don't know when it's going to go up, but I know that it is. As it continues to go up, and these junior miners in particular start getting the infusions of capital that are required for them to take the next step, like what you've just described. As the price of gold goes up, they get the infusion of cash. Next thing you know, you're looking at 2, 3, 4, as you said, 10 baggers. I mean, come on. It's all a risk. I'm not giving anybody any financial advice. I'm not a financial advisor. Just saying that the numbers don't lie. It's just that simple. And historically, Dave, mining stocks have led the charge in the gold and silver markets. And you touched on this just a minute ago. And as the miners and the mining company stocks begin rising in value, and the physical market, shouldn't it follow suit? And then with the fact that all the markets are rigged, can we count on history as any sort of a guide for the future, or what? How does that play out? This was when you and I last spoke with Craig Hemke, and I was asking him about the death candle, and I asked him specifically about looking at history because that's what he was doing. And I presume that you're looking at history as well. And as you and I both well know, the markets are rigged, and the history may or may not influence future. And how do you see that playing out? I mean, and once again, doesn't historically the mining stocks have led the charge, right, in the physical market?
It's a good question. It's kind of a chicken and egg thing. There's periods of time when the metals lead the miners, and then there's periods of time when the miners lead the metals.
Okay.
There's periods of time when gold leads silver. We can look to history for clues, but I would never base what I think is going to happen in the future on exactly what happened in history.
Okay.
And part of that is we've, at least in the modern era, we've never existed in a global financial system that is entirely rigged, and an effort is made to completely control it by the central banks the way we have now. And I think that when the central banks lose control, and I do think we're seeing signs that they're starting to lose control.
I agree.
And part of that is this equivocating on interest rates BS that they roll out every time we're a month away from the next meeting. But when they do lose total control, I mean, it's completely unpredictable what's going to happen. I mean, certainly in 2008, what happened, in the 24 hours prior to them grabbing $1 billion from the taxpayers and throwing it at the banks, that was all unpredictable.
Exactly.
And no one saw the Goldman Sachs AIG blow up. I mean, Goldman Sachs was basically an incinerated investment bank. If Henry Paulson wasn't the Secretary of Treasury, Goldman Sachs probably wouldn't exist in its form today. So I guess my point is we can look to history for clues. And assuming that the systems stay intact, I think what we're going to see at some point, I think you're going to sort of see the metals and the miners trade places in terms of who's leading from quarter to quarter. At some point, the miners are just going to, their rate of return is going to be far greater than the metals because of the implied leverage there as the price of gold and silver go higher. And at some point, the price of silver is going to sprint ahead of gold, and we're going to see that gold-silver ratio come down a lot.
That'd be good.
Right. And that's probably the point at which you say, okay, I'm going to start feeding some of my profits. I'm going to take some profits, feed some of my junior mining shares into the market and buy more gold and silver while I can still get gold and silver at a reasonable premium to spot.
Yep. Because that's when it's going to start breaking away and the premiums are going to start rising and the physical metal is going to start disappearing, or not disappearing, but it's going to become much harder to come by. It's not going to be as readily available.
That's right. And I just want to add something really quickly in here because to me this is very interesting. Since January, which is mid-January, which is kind of when I think everyone's, at least for now, agreed that the bottom was in the precious metal sector, the mining stocks, even on days when gold and silver get hit, there's occasional days where gold and silver are lower like they are today. The mining stocks, they were hit early when the market opened, and now they're green on the day. If I use the Huey index, I've got a lot of juniors on my screen that are up. One of them's up 6.7%. It happens to be one we own in our fund, but a lot of these juniors are up between 1% and then this one's up 6%. So I guess my point here is that the mining stocks are a lot bouncier right now than I've seen them in the last 15 years. In terms of, usually they correlate directionally with what gold and silver are doing. But for the last couple months, like I said, there's been plenty of days where the miners all of a sudden come storming back, even though gold and silver are still getting hit. And to me, that is just a message of the market, like, hey, this market's going higher. They may be able to cap it for a while, but it's going higher. And I think that's the message we're getting from the mining stocks.
Couldn't agree more. I mean, after, like I started out at the very beginning of the show, Dave, I've been speaking with a lot of mining executives from companies like Calinex and First Majestic and Nevada Exploration, just to name a few. I mean, and these people are all, they echo exactly what you've been saying. And, might be worth looking into. I don't think any of those are in your portfolio. They might be, but I know you said you just sold First Majestic, so. But I mean, it's you got to do something. I mean, and why not get wealthy? Why not get wealthy off a system that has been hammering your personal wealth for the last 40 years? Why not take advantage of this situation? But one last question, Dave, and I'll let you get back to your day. And What is your personal play at this point? And are you investing in the mining companies you offer in your subscription? And if so, what would be a signal that tells you it is time to get out?
Ooh, that's a good question. Uh, yes, in fact, right now I own the stocks that, not all of them. I own because the Mining Stock Journals was the debut issue was March 4th, and it's every 2 weeks that I issue it or that I publish it. It just so happens, though, that every stock that I've featured in the Mining Stock Journal, we do happen to own in our fund, and I'm not trying to pump up. I'm not trying to pump up the stocks in our fund by publishing the Mining Stock Journal. We own these stocks because they fit the profile of what I was talking about earlier. They're companies that have a great business model. They've got proved resources in the ground, and many of them are one takeover a bid away from being a 3 to 4 to 5 bagger.
That's what you want.
And in fact, one of the companies, I didn't get a chance to put it in the Mining Stock Journal because it got taken over, Silvercrest Mines, shortly before I was getting ready to debut the Mining Stock Journal, and that was in our fund. So, but its sister company, Silvercrest Metals, is one that I actually recommended in my short sellers journal before the Mining Stock Journal, and that thing's been as much as a 10 bagger since early January, and it's currently up. It's up about 600% from when I first recommended it, and we own that in the fund. And on every sell-off, I add more to it.
Wow.
So, in terms of what I look for when this whole thing implodes, honestly, Rory, I think about that every day, and I just don't know. I mean, like I said, it's just because of the degree of intervention and the creeping totalitarian that we're getting in the Western governments. I just think it's completely unpredictable. I think you kind of have to wake up every day and hope for the best, but prepare for the worst. And that's the way I live my life right now. Is, I hate to sound cliche, but I kind of take it one day at a time.
Well, I mean, and that plays back into what we were talking about earlier, as far as that's why it's important for people to take profits off of these shares and to invest them in physical metal, because just like you said, there's really not a signal. I mean, it's more of an intuition. It's what it sounds like, more of a gut feeling. It's like, oh my God, so if you're, as long as you are doing that, I mean, as long as you're taking your profits and turning them into physical, then you're going to stand a much better chance of not being abused once again by this system, right?
That's exactly right.
So, but I'm not going to take up any more of your time, Dave. This has been awesome. I mean, it's everything miners, and I really, really appreciate all your time and all your knowledge. This has been really very cool, and I'm certainly grateful for all of what you do. And I look forward to for us doing more of this in the future.
That sounds great to me, Rory. I really appreciate you having me on, and love working with you, and loved being interviewed by you.
Well, we'll do it again in a not too distant future. And in the meantime, folks, don't forget to tune in to Shadow of Truth, where you can hear a different sort of banter between Dave and I. Dave, we'll catch you on the flip side.
That sounds great, Rory. Speak to you soon.
All right.